Hello everyone! A new week has started and today we'll analyze the Bitcoin chart. And I have to say, the previous week closed very badly and the chances for growth to $100,000, which I mentioned before, have sharply decreased. Why? Let's take a look at the weekly chart. The previous week closed with a significant drop, and not just a drop, it completely engulfed the gains of the week before it. In addition, it broke through the 100-week moving average and closed below it. And this is a very serious signal for a further move downward. If this trend continues, there is a high probability that we will head toward the support level in the $78,000 area. This is where the cursor is positioned. If this level doesn't hold, then the next support level is in the $71,000 to $72,000 range. This is the consolidation zone from April to May of 2024. And finally, if that doesn't hold either, then the target is the 200-week moving average, which is around $60,000. Be prepared for this. On the monthly candles, we can see that in January we set a new high above December, and then the entire January rally was sold off. Yes, there are still 4 days left until the end of the month, but a candle like this indicates that there is a strong seller present in the market. And the November candle, the one with that big drop, is very likely, one way or another, to see a new low below the level of $80,600. Which means, technically, considering that we have already tested this support area at the monthly reversal point $82,500, we could then drop further into the trading range of March and April, May, and probably June of 2024. Again, that's the same $72,000. Once again, be prepared for this. On the daily candles, I turned on my chart markings, and let me remind you that we had a flat zone marked by yellow and white rectangles. We broke out of it, well, Bitcoin broke out of it, and the growth stopped at the 100-day moving average. That was quite predictable. A decline could have been expected, firstly, to test the upper boundary of the sideways range, as well as the level of 94,270. Well, basically that's the same upper boundary, just of the yellow rectangle. Well, in the worst case, we could have allowed for a return to the lower boundary of the ascending channel, which would also coincide with the 50-day moving average. But note that both of these were broken to the downside. In other words, we broke below the 50-day moving average, we broke below the lower boundary of the ascending channel, which means that for this reason as well, the priority is still downward. The probability that we will break through this sideways range to the downside and move towards the $76,000 to $78,000 area is very, very high. And still, under what conditions can we once again start considering the possibility of Bitcoin rising to the $100,000 area? That will happen only when Bitcoin once again consolidates above the 50-day moving average, which is shown in green on the chart, and returns back into the upward channel. This won't be a guarantee, but it will be the minimum requirement. Until then, I wouldn't consider any growth at all, in principle. A more global condition for talking about growth would be to engulf last week's bearish candle, which would mean closing at around $93,700. So, if we close this week at 93,700 or higher, then there is a chance for growth. But otherwise, we expect a decline to the $76,000 to $78,000 range, and possibly even down to around 72,000 or even 60,000. Subscribe to the channel. The next review will be about the stock market. See you next time.